Glad you make time to join us right here on KBC Channel 1. This is Brick by Brick, a segment where we'll be looking at issues facing the land and the housing sector in the country as the government targets to construct at least 500,000 housing units by 2022. Tonight, we look at the land and the housing price index released by the HassConsult, and we are joined by the head of research and marketing at HassConsult, Sakina Hassanali. Sakina, thank you very much for joining us.
Thank you.
Right. So over the last 10 years or so, we've seen from your statistics that the land price has actually increased sixfold. What does that say about the sector?
Okay, so what we've seen is within the satellite towns in the last 10 years, we've seen a sixfold increase in land prices, and we've seen a similar increase in the Nairobi suburbs of sixfold. However, within that, you'll see that there's some pockets that have done far better than that, and some pockets that have done a little bit lower than that. If you look within the suburbs within Nairobi, Upper Hill actually went up ninefold. And if you look within the satellite towns, places like Limuru, Juja, and I would say a lot of the towns within Kiambu County went up over tenfold. If you look at the underlying factors of the increases within each of these counties, rather within each of these areas, you'll see that there's some driving factors that lead to land price increases. In the case of Kiambu, it's probably the closest county to Nairobi in terms of access, and as prices per acre in Nairobi are almost at an average of 189, people are looking for acreage that's a bit cheaper but still with close access to the city. And so we've seen that all the towns within Kiambu have done incredibly well in the last 10 years. However, we did see a dip in the last year, and this is because the Kiambu County government came in with potential land use changes where they want to boost food security, and that is move more housing towards use for agriculture. Now this might have scared a lot of investors, and we saw that the land prices reduced somewhat. So if you look at the kind of things that affect land pricing in just within that scenario, one is infrastructure development is huge because the Thika Super Highway really boosted Kiambu along with all the other bypasses that are supplying it. And you also see that government or rather local county decisions will have an effect on the land prices, as did the one that happened in July 2017 by the Kiambu County government. In Upper Hill, we've seen that sort of an increase, and one of the biggest factors of the increase in land prices in Upper Hill is that the density that's possible in Upper Hill is quite high. You can go up to 45 stories, 60 stories. And what that means is the underlying base value of the land will then go up. And as the commercial sector over the past 10 years has seen incredible growth, and Upper Hill is kind of the hub of all commercial building activity. That's what's led to the increase in the prices of land in Upper Hill. Nairobi, because of the fact that it's the hub of Nairobi and to some extent the hub of East Africa, there's continually sustained demand for both commercial and residential property. And that means that if a developer were to buy land and then attempt to sell his building, he would constantly have the demand for it, which pushes up the land prices. So one of the other biggest contributors to land prices is a continued sustained demand from the end market, so the end user, the end commercial user, the end residential user.
And Sakina, to what proportion do you think the land prices actually contribute to the overall cost of construction?
Well, land prices are a big cost to a developer, and so they will pay for land in as much as it still makes sense for the project feasibility. If land prices move beyond what is acceptable so that the project can still turn a profit, then they won't pay that much and you'll see land prices stagnate. But if you see that land prices are going up and they're still being absorbed by the market, it means that the current demand for housing is allowing developers to still turn a profit even at the current land prices.
But will legislation sort of ease that?
It will have a similar effect as the interest rate cap, is that when you try to force you have to look at what's the underlying issue, and try and fix those things. If you try and fix a rate or you fix a land price, you're not looking at the underlying issues that are affecting that rate. If you wanted land to become more affordable within the city, probably the better thing for government to do would be to improve infrastructure around the city, outside of the city, so that it's easier for people to get out of the city rather than have to stay here. If you see infrastructure being developed outside of the city, just as it has been in Kiambu, and you've seen sort of the shift of people towards Kiambu, you'll see less strain on the city in terms of its services. You'll see property and land prices going down because people now have options, and then you'll create commercial nodes outside of Nairobi, and people can start to enjoy fringe living.
So do you think the escalating land prices is likely to dent that particular project of 500,000 affordable housing units?
Okay, so no, it won't, because what that means is, from what I've heard of of what the government wants to do, it wants to promote high density housing outside of the city, right? So that means that it wants to build in excess of 10 to 14 floors. If a land prices outside of the county go up from, say, 10 million to 20 million, and for example each acre is holding 200 units, that means the cost per unit that goes up from the land price increase is very, very minimal, which means that land price isn't a huge cost to housing outside of the city, just because the land price per acre is actually not that high. So I don't think that land price increases at this rate, or even at double or triple this rate, would make housing outside of the city very expensive.
And the government says that they're going to absorb 10% of the 1.2 trillion shillings needed for the affordable housing units. So infrastructure plays a key role in terms of the cost of housing. What are we likely to see when it comes to land prices?
Well, you'll see land prices increasing there, but you'll see the difference between land prices in Nairobi and in those areas start to equalize a little more. Right now, the average price per acre in Nairobi is almost 200 million, and the average price per acre in the areas outside of Nairobi is about 13 or 14 million. So you probably want to ease the pressure from Nairobi a little bit. Yes, the prices in those other areas would go up, but that also means that they're more habitable, and the city can ease its congestion a little bit. So it's not a terrible thing for land prices in Nairobi to cool down a little bit, and for those in the surrounding towns to come up a bit, just to equalize it a bit.
And so, as developers, what sort of incentives are you looking at for this particular project?
I think the private sector would like two things fixed. One is obviously to provide the necessary services, so the roads, the water, the power. All the infrastructure services are a significant cost of a project, and if that was supplied, and it would reduce the load of development, or rather development costs. That's the first thing. The second thing is actually end buyer finance. If you find, it's one thing to be able to provide units, even as cheap as 1 million shillings a house, but the end user has to be able to afford it and has to be able to finance it. If the end user is able to access mortgages at a more favorable rate, then you'll find uptake of these houses a lot better, and the developer is able to produce a lot more. So I would say that the two bottlenecks would be, one, infrastructure, and two, end user financing. Well, land planning is always good, and I think it has to be done carefully, because once you build something, you can't unbuild it. So I think planning is very important, especially in the cities just outside of Nairobi, or the satellite cities just outside of Nairobi. And I believe some counties are looking quite keenly into it. But I think planning is always very, very important. Anything that reduces the cost of a development. To be honest, the tax breaks that people get on importing for hotels is quite good. If they were to also give that to, residential and commercial developments. I mean, of course, they have to balance it with the revenue that the government needs from that sort of activity. But that would spur just a little more growth in the development market.
And your housing price index also indicates that rents actually went up by 1%, while income was stagnant. What is the workable solution towards this particular issue of rent?
So what I think it is I think one particular segment of housing, which is big apartments within the city, have been oversupplied, and particularly in Kileleshwa. So when you see a lot of these houses sitting empty, there's always a question of, are we in oversupply? But what you'll see is that there's always segments that are, at any one point, there'll be segments that are oversupplied, and those that are still being demanded. The real estate market in Kenya is not ubiquitous anymore. So you'll see some areas where rental prices, apartment prices, house prices are actually going down because there's oversupply in that particular segment, and there's not enough demand for that segment. And you'll see areas where there's not sufficient housing because there isn't sufficient supply, or the rentals continue to go up because there isn't sufficient supply. I think it's a job of every developer to look for those areas that are still undersupplied, because if they continue to supply the oversupplied areas, then all that means is that asset class will go down in capital price, and it will go down in rental. What will happen is with houses that are left bare because there's an oversupply, you'll end up having extreme discounting. You'll have people selling it off for cheaper, closer to cost. You'll have it renting a lot cheaper just so people can make some rental income on it. But it's a lesson to learn that we shouldn't be oversupplying already supplied areas. 10 years ago, the market was a lot more ubiquitous. So what that means is you could build anything anywhere and it would work. It doesn't work like that anymore. It's for this reason that has such a big undertaking in collecting market data. All the projects that we have, we conceptualize ourselves. So we provide the market gap to the developers for them to play in a market that is currently undersupplied and over-demanded, without proper visibility of actually what is happening on the ground in terms of what is going up and what is going down, what is oversupplied, what is over-demanded. It is a very risky venture. Real estate has now become a very risky venture for blind investing. You have to do it with the data in hand.
And what can counties that are experiencing exponential growth do to sort of attract the real estate developers to meet the demand, the housing demand in the counties?
Developers need to be certain that there is sufficient demand within those areas to be able to sustain the sales of their developments. And demand within those areas is considerably less than Nairobi. You have to remember there's a huge investor market in Nairobi as well. It's not only people who buy are not only buying to live in those houses, they're buying as an investment venue. And a lot of the investment funds are within Nairobi. So there is a huge engine of demand within Nairobi that supports developers here. Having said that, I do think that counties, Nakuru in particular, Kisumu, and now Mombasa is recovering. Those two particular, Kisumu and Nakuru, are backed by active economies, right? They're agriculture-based economies, and I would say they have sufficient housing demand to start looking into that area. But developers like to go to a place that's the least risk and the place they know the most. But I do believe that there are some frontier markets that are open to looking into at this point. Yeah.
Thank you
It was
very much.
nice to meet you. Yeah.
That was quite insightful.
Mm-hmm.
And